July the 2nd, 1997. Thailand ran out of dollars and let its currency fall. Within 7 months, the baht had lost more than half its value. Indonesia's president of 32 years was gone, and $105 billion of foreign money had walked out of Asia. Here's the strange part. These were the fastest growing economies on Earth. Nobody lost a war. No factory burned down. The money just left. So what actually happened? Let's go back to when everything was going right. Start with the only rule you need for the next 12 minutes. Money moves. It flies into a country while things look good, and it leaves faster than it arrived. Everything after this is that one sentence, wearing a suit. In the early 90s, money looked at Thailand and fell in love. Bangkok was building. 9% growth a year for a decade. The World Bank called the whole region a miracle. Miracles draw a crowd. Thailand made that crowd one promise. 25 baht will always buy $1. Always. The central bank would defend it, whatever it took. So if you ran a bank in Tokyo or Frankfurt, lending to Thailand stopped feeling foreign. Same risk as lending down the street, but the interest was double. Free money with a government guarantee stapled to the front. Thailand's foreign debt went from $29 billion in 1990 to $90 billion by 1996, most of it due within a year. Here's what Thai finance companies did with it. Borrow dollars abroad cheap. Lend that money at home in baht expensive. Keep the difference. You are borrowing in a currency you don't earn to lend in a currency you do, and betting the exchange rate never moves. That trade prints money every single day the promise holds. It ends the afternoon the promise breaks. So, where did all that borrowed money go? Into condominiums. Bangkok grew a forest of cranes. Office towers, golf resorts, whole suburbs sold off a blueprint. By 1996, the city had more finished apartments than it had buyers, and developers were still breaking ground on the next one. Everybody could see the empty floors. Nobody wanted to be the one who stopped early. Which made the borrowing conversations sound roughly like this. We'd like to borrow $40 million. You're a Thai company. What do you earn? Baht. We lend it out again in Bangkok. Towers, mostly. So if the baht ever falls, your debt doubles and your income doesn't. The baht can't fall. It's fixed at 25. The government promised? Right. Sign here. February 5th, 1997. A property developer called Somprasong Land missed a payment on a foreign loan. One bill in a country carrying $90 billion of them. But it was the first time anyone in Thailand had failed to pay foreigners, and the foreigners noticed. In May, Finance One, the biggest finance company in the country, went under. And the men watching screens in London started asking a question. Nobody in Bangkok wanted asked. If the buildings are empty, what is holding up the promise about the baht? The answer was a number the Bank of Thailand did not want printed. To hold 25, the bank had to buy every baht the world wanted to sell and pay for it in dollars from its reserves. Traders worked out roughly how many dollars were in that vault. Then they started selling baht by the billion. It was arithmetic. If the vault empties before you run out of baht to sell, you get paid. Thailand fought. It burned about $10 billion of its $38 billion in reserves out in the open. Then it did something clever and fatal. It defended the baht with forward contracts, promises to hand over dollars later, so the published reserve number stayed calm while the real one drained. Everyone was watching a full vault. The vault was mostly IOUs. By the last week of June, the meetings in the central bank sounded like this. How much is left? 30 billion on paper, and off paper, under 3. Then we stop today. If we stop, every dollar loan in this country doubles overnight. Half the banks fail by Friday. I know. Sell. July the 2nd, 1997. Thailand announced it would let the market decide what a baht was worth. It dropped about 15% before lunch. It did not stop there. 25 to the dollar in June, 56 by January. Every Thai company holding dollar debt now owed twice as much, payable in a currency worth half as much. Thousands of them were insolvent by dinner. They just hadn't opened the mail yet. Thailand is a mid-sized economy at the edge of the region. Nobody in Seoul or Jakarta thought this was their problem. They had different governments, different banks, different industries. 2 weeks later, the Philippine peso broke, then the Malaysian ringgit, then the rupiah. The thing moved across Asia at exactly the speed of a fund manager reading a headline. Because here's what a fund manager does all day. Thailand, Indonesia, Malaysia, and Korea sit in one folder marked Emerging Asia. Thailand blows up, their boss asks what else is in that folder, and they don't go and research 4 countries. They sell the folder. One house on the street burns down, and the insurer cancels the whole street. That's contagion, and it's filing. Malaysia's Prime Minister Mahathir Mohamad had his own theory. Currency trading was immoral, he said, and should be made illegal. And he named George Soros as the man doing it to him. Soros called him a menace to his own country. It made excellent television. It changed nothing at all. There were never 2 men doing this. There were 10,000 screens, all reading the same folder. Indonesia had furthest to fall. In July 1997, it took 2,400 rupiah to buy $1. By January, 10,000. In the worst week of that month, the rupiah lost around 1/10 of its value every single day and touched 14,000. 80% of the country's money gone in 6 months, and the price of rice is set in a currency that is being repriced hourly. A number that size stops meaning anything, so hold one house instead. A shopkeeper in Jakarta earns rupiah and buys imported rice. The wage doesn't move. The rice quadruples. Indonesia's economy shrank 13% in a single year. By the estimates of the time, roughly 100 million Indonesians, about half the country, were living under the poverty line, and 89 million were down to 1 meal a day. Then the crisis did the thing nobody had priced in. It walked into Korea. Korea was the 11th largest economy on Earth, with real factories making real things people wanted. Samsung, Hyundai, shipyards building the world's tankers. In November 1997, Korea owed foreigners over $150 billion. Its central bank had under $4 billion it could actually spend. On December 3rd, Korea signed for $58.4 billion from the IMF and everyone the IMF could call. The largest rescue anyone had ever assembled. In Korea, almost nobody calls what followed the Asian financial crisis. They call it the IMF crisis. That is how the money felt when it landed. The country had been put into receivership. Here's the part I'd want a 5-year-old to remember. In January 1998, Korean television asked people to bring in their gold. Wedding rings. The little rings grandparents buy for a baby's first birthday. Olympic medals. 3.5 million people queued. 1 in 4 Koreans, and handed over 227 tons of it. It raised about $2.2 billion. Nowhere near enough to fix anything. It was never really about the money. The IMF's price for its money was a list. Raise interest rates. Cut government spending. Close the broken banks. On paper, that is the standard treatment for a country that has been reckless with borrowed cash. In practice, these countries were already mid-bank run, and the prescription was to make borrowing dearer and the state smaller. It's a doctor treating a bleeding patient by putting him on a diet. January 15, 1998. Suharto sits at a desk in Jakarta and signs for $43 billion. Behind him stands the head of the IMF, arms folded, watching him do it. One photograph on every front page in Asia, saying the thing no press release ever would. This country does not decide anymore. Kemdesis admitted as much when he retired. His words, We created the conditions that obliged Suharto to leave his job. 4 months later, Jakarta was on fire. Subsidies were cut, prices jumped, students filled the streets, and the shops were emptied. More than 1,000 people died in the May riots. On the 21st of May, 1998, Suharto resigned after 32 years in power. He'd survived coups, a Cold War, and every rival he ever had. A currency finished him in 10 months. Malaysia did the forbidden thing. In September 1998, it turned the IMF down, pinned the ringgit at 3.8 to the dollar, and made it illegal to take money out of the country for a year. Every serious economist called that madness. Capital controls were heresy. Malaysia then recovered at roughly the same pace as the neighbors who swallowed the medicine, and the profession has been quietly arguing about it ever since. By August 2001, Korea had repaid the IMF in full, about 3 years early. Thailand recovered. Indonesia built a democracy out of the wreckage, and every finance minister in Asia came out of the 90s with the same one-line conclusion. Never again. Never be caught short of dollars. Never let a fund manager in Boston decide whether your country eats this year. So they built vaults. Korea's reserves went from under $4 billion to more than $370 billion. Indonesia's went from $18 billion to over $125. China watched the whole thing happen and built the largest pile of foreign money in history. The region stopped buying growth with foreign loans and started running surpluses instead. Sell to the world, stack the dollars, keep stacking. But dollars don't sit still in a vault. Asia's insurance policy had to be parked somewhere, and it went where dollars go, American bonds. An ocean of cheap money arriving in the United States, looking for something to buy all through the early 2000s. Asia spent 10 years making sure 1997 could never happen to it again. And the next time a property bubble ate a financial system, it wasn't in Bangkok. One more thing, because this isn't a museum piece. Look at what money is doing this year. Google, Amazon, Microsoft, and Meta are on course to spend about $725 billion, most of it on data centers for artificial intelligence. That is up 77% in 12 months. The buildings go up first. The customers are supposed to arrive later. Bangkok ran that exact sentence in 1996, and it is increasingly borrowed. Bond issuance backing the AI build is on course for around $570 billion this year, roughly 4 times last year's pace, with hundreds of billions more routed through private credit, where the numbers are harder to see. Thailand at least had a number on a board. When 25 broke, everyone found out in the same second. There is no 25 in this one, so it won't snap at lunchtime on a Wednesday. It will empty the way those towers emptied, floor by floor, while everyone keeps saying the buyers are coming. One last thing. There's a video on this channel about the AI trade, and it opens with the sentence this one opened with. AI stocks lost $1 trillion in 2 weeks. No company failed. Nothing broke. The money just left. 29 years apart, the same 5 words. That video walks the 5 stages every bubble runs through and works out which stage we are standing in right now. Watch that one next.